Welcome back. The bulls have been slowly controlling the markets now. We've had 7 good days on the trot, and today could be the 8th. The GIFT Nifty is currently up close to about 70-odd points, and IT could provide support today, particularly Infosys. Siddhartha Khemka, Head of Research, Wealth Management at Motilal Oswal Financial Services, is now joining us on the show. Siddhartha, the first question is on Infosys. Should shareholders tender in the buyback at 1,800 rupees per share? Is it attractive?
Good morning, Rima. Yes, I think if you look at it's a kind of dividend that the company is giving back to the shareholders. So definitely the current shareholders and anyone looking to get a good dividend yield in the current market, value investors, they would definitely like the kind of premium that the company is giving on the current price. So I think purely from a dividend yield perspective or a kind of a value investor should look at participating in this buyback from Infosys.
Okay, participate in the Infosys buyback. That's a thumbs up. Siddharth, good to have you in. But what about the rest? I mean, yesterday TCS started running because people then get, they get very excited. They think maybe TCS will also do something similar. I don't know. I mean, how do you look at the other large peer?
Yeah, good morning, Survi. I think there are two things to look at purely from a Indian IT sector perspective. The huge buyback that Infosys announced, that kind of shows the conviction that the management has that the worst is behind and the stability in the business going forward, and hence returning the cash that the company has on balance sheet. So in terms of valuation, we get some comfort that the downside is limited, the worst is behind, and that is a positive rub-off effect for the bulk of other large IT players sitting on cash. So there is definitely an expectation that some of the others, especially the largest Indian IT company, TCS, could also follow suit and announce a buyback or a special dividend, something by way of which they reward the shareholders in the bad times.
All right. Hi, Sid. Good to see you in this morning. Let's focus on Lodha. You know, they have inked an MOU with the Maharashtra government for a 30,000 crore rupee data center park in Palava. And if you want further details, my colleague Sudarshan lives around there. He's done an in-depth analysis. But we want to know about the stock. Tell us about Lodha. What's your view?
Good morning, Nigel. I think we have seen that trend in the past, Anantraj from real estate getting into the data centers. And now I think Lodha, with the huge land bank that they have, I think that's a good monetizing opportunity in the some of the emerging themes that these players can get into. So I think it's a better yield for them compared to what if they would have looked at a commercial place, because the entire space and the demand for data centers is huge. If a company gets that kind of size, space, and the infrastructure in one place, I think that's a win-win situation for all. So definitely, Lodha is something that we have been liking a lot in the Mumbai region, the MMR region. Lodha has had a premium positioning, and now with a new line of business they are getting in, I think that only adds to the overall positive outlook for Lodha.
By the way, the primary market is also active. So today is the last day to subscribe to Urban Company, and the other one is Shringar House of Mangal Sutra. So Urban Company, we know, about 15,000 crore in terms of market capitalization. So far in the first 2 days, it's seen a subscription of about 9 times. And the opportunity ahead of the company is pretty large. And the other one is this House of Mangal Sutra. Smaller company, market cap is about 1,500 to 1,600 crore rupees. The issue size was 400 crore rupees. But again, good subscription on the first 2 days, 8.25 times. The company, I think, has about a 6% market share in India's organized Mangal Sutra. Last year, the company's top line went up by 30% to 1430 crore, and bottom line came in at 61 crore. Siddharth, as a house, are you all advising on these two, Urban Company, and the other one is Shringar House of Mangal Sutra, and what would the call be?
So Rima, unfortunately, we are not having any view on these IPOs currently.
Got that. In the platform plays, since, I mean, there is a lot of interest, but stocks have also done very well. They've skyrocketed, and now Swiggy is also coming up with this Quick India movement. So they're going to rival the Amazon Great India Sale or the Flipkart $1 billion sale. So they're saying it's time now for quick commerce to come out with these. And they've come out with a date in September. So, I mean, there's so much news flow. There is opportunity. Companies are tapping into it, grabbing market share, expanding the pie. But amongst the entire platform play, which one do you like?
So I think yes, we like this space. Platform companies, the profitability has gone up, and especially if you look at the food delivery business, they have been consistently generating cash flows. That is something that we have been liking. I think the platform fee has been hiked consistently. The other factor is that in the quick commerce space, the competitive intensity that has come down, and with the new player Zepto saying that they now are focusing on cost and profitability with an eye on the IPO that they intend to do sometime later. I think that bodes well for some of the earlier players like Eternal and Swiggy, both of which we continue to like. We have what we believe is that the capex intensity will now come down in the dark stores. Profitability will improve both in the food delivery business as well as in the quick commerce business. Our preferred pick is Eternal. We have upgraded our target price to about 500 rupees. Sorry, 420 rupees. And Swiggy also we have upgraded. We had a neutral rating and we have upgraded the stock to now a buy with a target price of 500.
Sid, so it's upcoming festive season, the GST play. Give us your top 3 picks. GST/consumption/festive picks. Which ones will you go with?
Sure. So I think definitely there is a lot of hope that the consumption basket that should do well, and within that, what we believe is that if you look at it's a wide range of consumption discretionary plays that we can like. So the top pick there is first is the company called Vishal Megamart VMM. It's a offline first retail stores largely present in tier 2, tier 3 towns. We believe that the strong expansion, strong growth, and the value retail format that where they have a good leadership and strong brand recognition that could do well. The other is Swiggy, as we already discussed. We believe with the GST rate cuts, the consumption boom, and the profitability coming back in the quick commerce business, that could be another stock to play for the overall consumption theme. Then the third stock what we can see is the hotels. Again, GST rate cut, traveling, GST rate cut below the 7,500 mark, strong expansion. So our preferred pick there is Lemon Tree.
Okay, all right. Sid, what about the metals pack? That's suddenly shining yet again. And NMDC is a stock actually that's been quite strong. And the reason is that we're going to get into the post-monsoon period, which is, the important period that we look at. So demand comes back out there. And also global pricing has strengthened a little bit. That in turn will make the case quite strong to go ahead and take a price increase here in India. What's your view at NMDC? I think yesterday it closed in the ballpark 75, 76 odd.
Sure, I think, Nigel, there are 2-3 factors that are also supporting the global metal prices. If you look at, there is a possibility of a rate cut by the US Fed that has also supported sentiments for metals, and we have seen the metal prices going up both in the ferrous as well as in the non-ferrous segment. Plus, as you rightly said, post-monsoon, the volume of take that will pick up, chances of price hike. Plus, the government has also come out with the rare mineral earth policy where some of these mining companies can possibly get another source of diversified business income. So we like NMDC. We have a buy rating and a target price of 84 rupees. It plans to double its capacity to 100 MTA over the next 4-5 years to capitalize on the overall rising steel production in India, higher iron ore demand. And we believe with the strong volume growth visibility, the margin improvement probability, and the prudent capital management, one can definitely look at NMDC from a long-term perspective.
You're also bullish on the consumer luggage sector. You believe it offers a multi-year structural growth story. So the top line can compound at a double-digit growth of about 12%. So you like both Safari and VIP here? And if go ahead.
Yeah, go ahead, please.
So tell us the rationale behind Safari, VIP, between the two, which one is better placed? Because now there is a change in management when it comes to VIP also.
Sure. I think the entire story is that the luggage sector offers a multi-year structural story shifting from utility to lifestyle, and we believe that the organized players with almost 52% market share, growing dominance, the branded luggage industry is set to gain further with rising income, premiumization, and the the Indian travelers now taking up a lot of up to travel. So while we also like the hotel space, we have been liking it for quite some time. Another way to play the overall travel leisure segment was through the luggage sector, and there we believe that the travel revival, weddings, students, corporate mobility, all those things could lead to a 12% industry CAGR over the next few years. Within these stocks, I think both of the stocks we like, both VIP. There is a recent underperformance, but now with the change in top management, we expect a revenue CAGR of 10%, but margin improving and a EBITDA CAGR of almost 50-60% going forward, driven by both volume growth and sharp improvement in margins. Safari has been a leading player, continuously outperforming the industry, 30% market share. They have reported a revenue CAGR of 36% in the last 2-3 years. They have focused on building the brands like the Safari Select, Urban, Jungle. These are the premier positioning. And then I think there also we are expecting a steady growth of about 25-30% earnings CAGR over the two. So between the two, I would say the preferred one is definitely Safari, consistently delivering strong growth. We have a buy rating with a target price of 2,700 on Safari. But someone who's looking for more risk or a kind of turnaround play, that there they can look at a VIP Industries where things are likely to improve going forward. Again, we have a buy rating and a target price of 530 on VIP Industries.
Okay, all right. So travel, consumption, delivery, and a lot of consumer-related plays. Got that. Siddharth, thanks very much. Good to have you on the show today, and you have a great Friday. We will connect again soon.